Hi students, so welcome dito sa ating next discussion for our Unit 1, Partnership. The next is Partnership Operations. So tapos na tayo dun sa Partnership Formation. Meron na akong separate video lecture dun. So I will continue the discussion for Accounting for Partnerships. Okay, so let's start with Partnership Operations. Our focus points for this discussion is to discuss salaries, interest, and bonuses, methods of profit or loss distribution, and bonus computation. Okay? So let's start with discussing salaries, interest, and bonuses. Salaries. Salaries, the partners may agree to pay for salaries. So within the partnership, within the operation of the partnership, the partners may agree to pay salaries to each partner, okay, especially to those entrusted in the management of the business affairs. Okay. And salaries may be fixed or performance-based or based on the results of the operation. It depends on the agreement of the partners on where to base the distribution and payment of salaries. Salary distributions are actually allowed whether there is a loss or a profit. So regardless of the result of the operation of the partnership, whether it is a profit or a loss, if they agree to distribute salaries, then salaries should be distributed among the partners. Okay? Salaries may be accounted for as part of total expenses or charge drawing account of the partners. Okay? The effect is still the same on the total capital account. Although the most common method or most common practice in accounting for distribution of salaries, since we are referring to profit distribution, then salaries should be considered as not as an expense. Rather, it is charged to drawing accounts. Temporarily, they are being charged to drawing accounts and later on will be closed to the capital account. Some other books will present it directly as as an addition or charge to the capital account to increase the capital of uh, the the partner. However, some books present it as charge muna sa drawing, then after drawing, charge it uh, close to the capital account, thereby increasing the capital account. Charge muna sa drawing, then later on, i-charge dun sa uh, capital account. I-close sa capital account. Okay? So, mas common ang pag-charge sa drawing account. Next is interest. Partners may also agree to pay interest other than salaries. Okay? So interests are in form of percentage amount based on capital balances. So this is not the typical interest that we encounter in problem solving when we have in lower accounting. So interest, when we say interest, it is the additional, okay, distribution based on the capital balances in a specific period. Okay? Capital balances of the partners. Interest, okay, similar with salaries, whether the result of the operation of the partnership is a loss or a profit, if they agree to distribute interest, then they can distribute interest. Okay? Interest may be credited directly to capital account or temporarily drawings account, similar with salaries. Okay? But the common practice is that it the partnership accounts it as a charge muna dun sa drawings account, then later on decrease the drawing account by closing it to the uh, capital account, or some other presentation may have it directly charge increase the capital account. Okay, so later on we're going to illustrate it in the problem solving. Last is bonuses. Okay, partners may also agree to pay for bonuses, okay? Especially for managing partners. So of all the partners, hindi naman pwede na all the partners will manage the business. Okay? Commonly, there are those partners that are assigned to manage the business. So they are called managing partners. Practically, those managing partners ay yung mga industrial partners who use their expertise in as part of their contribution to the partnership. But it does not necessarily mean that industrial partners lahat. Okay? Common example lang naman. So in consideration, bonuses are in consideration of positive result of operation. And based on the definition, okay, based on what I've said, that it is based on positive result. Therefore, unlike bonuses, unlike salaries and interest, bonuses are only distributed if and only if the operation is positive, meaning earned income or profit. So if it is a loss, sorry, there is no distribution of bonuses. Okay? So there must be a profit. So there's a common rule: no profit, no bonus, because it is based on the performance and the operation of the result of the operation of the partnership. Okay? Bonuses may be credited, similar with salaries and interest, may be credited directly to capital, or it could be credited to temporarily drawing accounts. Can credit si drawing account of the partner, okay, and it is based on their agreement lang naman. Okay, then crediting to capital to drawing account will result to closing it later on to the capital account, thereby increasing the capital balance of each partner. So mas common yung temporary muna sa drawing account, then charge it close to uh, capital account. Okay? Let's proceed with the methods of profit or loss distribution. So earlier we have an overview of what is salaries, what is interest, and what is bonus, or what are bonuses. Okay, so those three are the common salary distribution in pertaining to partnership operation. Now, we're going to talk about the methods naman. Okay, methods of profit or loss distribution. How do the partners distribute the profit? Okay, mainly the profit, of course. So if there is a loss, they can also distribute the loss. So, but mainly again, profit. But because the goal of the partnership is to earn profit. So according to chapter 2, wow, I have a citation. So chapter 2, article 1797 of the partnership law. Okay. The losses and profits shall be distributed in conformity with the agreement. So since we're talking about partnership, we always look into the agreement. Okay? The accounting side only tawag nito, rely, it depend on the agreement of the partners. Okay? If only the share of each partner in the profits has been agreed upon, the share in each in the losses shall be in the same proportion. Anong ibig sabihin niyan? Walang problema on the first statement that the losses and profits shall be distributed in conformity with agreement. So we shall depend or rely on the agreement of the partners. What does it mean by the second statement? If only the share of each partner in the profits had been agreed upon, the share of each in the losses shall be in the same proportion. Ibig sabihin lang yan, if the partners did not agree as to the distribution of the loss because they only focus on the distribution of the profit, should the operation of the partnership resulted to a loss, such loss shall be distributed in accordance if profit had been the result. So meaning, kung loss yan, kung paano i-distribute yung profit, ganun din ang distribution sa loss. Otherwise, if they agree differently in the distribution of the profit and the loss, they may do so. Okay? Again, Tagalog ko na lang, kung ano ang pagka-distribute nila sa profit, tapos walang agreement sa loss, yung loss i-distribute in the same way dun sa profit. Okay? So, the partnership law does not provide as to the specific methods. The only term or the phrase stated there is in conformity with the agreement. So, partnership books or partnership discussion provides for different scenarios on how partners are going to distribute their profits or loss. Okay, so they may agree to have it equally, or using an unequal proportion, or they may use ratios or percentages. Okay, using capital balances, they may use their current capital balance, or they may make ratio or percentages based on their capital balances, or they may agree to have it mixed. There is distribution of salary, then the excess based on the agreement. Or aside from salary, they can have it with interest, then the excess based on the agreement. Or aside from salary and interest, they can add bonus if there is a there's an agreement for bonuses. Okay, with bonus and the excess based on agreement. So how do we apply this in the problem solving? Okay, so let's proceed with first with equal distribution. By the terms self, equal. So equal proportion. So if the partnership, let's have it in the problem solving. So A, B, and C form a partnership. After the first year of operation, the partnership earned a net profit in the amount of 45,000. They agreed that the profits or loss will be divided equally among them. Their capital balances before considering, take note, capital balances before considering net profit are 120,000, 130,000, and 140,000 respectively to A, B, and C. So therefore, there are three partners. They formed partnership. Then after the first year, they earned 45,000 net profit. So if we're going to have it in equal distribution, we can have it three partners. So therefore, 45,000 divided by three partners, we can have 15,000 each. So total still 45. Their capital balances will be increased by 15,000. So for A, B, and C, we can have 15,000 each. Then after distribution of the profit, we can have A, 135,000, A, 120,000 plus 15,000. Then for B, we have 145,000. There's the computation. And for C, we have it 155,000. Okay, so the total of our capital balance before the profit is we have it 390,000. Just check on the computation. I guess it's 390,000, then plus 45,000. It is only it must be equal to 435,000 after considering the profit. Okay, so take note of what is meant by equal distribution. Okay, so our journal entry. Okay, since it is a profit, I hope you have encountered the account income summary or income and expense summary in your basic accounting. So when it comes to accounting for income amounts or income accounts, when preparing for income statement, we actually use a summary account, which is income and expense account, thereby charging everything in that account: expense, losses, revenues, and gains. So if the rule for income and expense summary, if it is credited, if it is a credited, or if it is if it has a credit balance, then there is a net income or net profit. However, if it is debited or has a debit balance, then it means there's a net loss or deficit. So prior to this journal entry, by the way, there must be a previous journal entry providing that the income summary is on a credit side. Okay, but the journal entry that I am presenting now is referring to the profit distribution already. Since there's an income, okay, previous entry should be income summary should have been credited, but because we are already distributing the profit, it is only proper to debit the income summary, then credit the capital accounts of the partners. The partners can agree to have it credited directly to the capital accounts. Okay, directly credited to capital accounts. However, there are majority presentation in the books that they have it as Okay? Credited first to drawing accounts. Okay? It depends on the agreement and the intention of the partners. Okay? Usually, crediting to drawing accounts is in anticipation of profits. So they anticipate profits, or this will lead to the concept of temporary withdrawals. So we are maintaining drawing accounts. So after crediting it to drawing accounts, later on they're going to charge it, okay, close to capital accounts. It's just the same scenario. Parang the previous presentation, diretso credit sa capital account. Dito dumaan muna sa drawing. Then, i-credit naman sa capital account. The effect is that the drawing account with credit balance, pag dinebit, closing to capital account, na-zero out. Yung effect parang the same pa rin if directly charged to capital account. Okay? Next, with a loss. Okay, suppose in the preceding problem, instead of a profit, there is a loss of 69,000. They agreed the profit or loss will be divided equally. So their capital balances before considering net profit or net loss are 120,000, 130, and 140,000 respectively. Okay, so total of 390 before profit or loss. So since it is a loss and we're going to divide it equally, so 69,000 divided by 3, 23,000 each for A, B, and C, respectively. So after the division of the profit, the capital balances of each partner will be decreased by equal amounts of 23,000 each. So for A, after the division of the loss, division of the loss, so we can have 97 for A, then 107 for B, and 117 for C, okay, in thousands. So 390 minus 69,000, we can have it as 321 net total. Okay, so for journal entry purposes, since the result supposed as an assumption is a loss, a previous entry should have been presented is that the income summary or income and expense summary should have been debited to indicate a loss. Okay, what I'm talking about is when you prepare income statement, okay, you are summarizing the expense accounts, then the revenue accounts. You are closing everything, and whichever is whatever is the excess, if it is a credit amount or a debit amount, will depend on the debiting on the income's summary or income or expense summary. So if the income and expense summary is debited, it's a net loss. If credited, it is a net profit. Okay, so after considering distribution of the net loss, we can have it debited directly to the capital account, thereby decreasing the capital accounts. Then credit the income summary to close out the net loss. Okay. However, other books will have it presented as debit first to drawings account, then credit the income summary. This is also dependent or dependent on their agreement and intentions. Okay, so it could be temporary advances. Okay, so drawings debited to drawings, afterwards they can have it debited to capital account. So the debit to drawings and later on credit to drawing account will zero out the balance in the drawing account, thereby yung effect decreasing the capital accounts. Take note, drawing accounts are being closed to capital account regardless of the balance of the drawing account. Okay, it will be closed later on to the capital account. Next is unequal proportion. When we say unequal proportion, by the name itself, the partners will not receive equal distribution of the profit. So let's have it with a profit. So the same problem, however, the only difference is that they agreed that the profit or losses will be divided in the ratio of 2:3:5. Meaning, if we're going to total the ratio, it is 10. So 2/10 is for A, 3/10 is for B, and 5/10 is for C, or 20, 30, 50% in a form of percentage. Okay? So for the, using the agreed ratio, we're going to have interpreted as follows: 2/10, 3/10, and 5/10, or 20%, 30%, 50%, for a total of 100%. Okay, it's up to you how you're going to interpret 2:3:5 ratio. Okay, so that's only my presentation. So the distribution of income based on the percentages that we have arrived: 45,000 times 20%, we have 9,000 for A. Then 45,000 times 30%, we have 13,500 for B. And the excess of 22,500, which is 50% of the 45,000, we can have it for C. So a total of 45,000 no. Okay, then the capital balances after the distribution: A, we have 129,000. B, we have 143,500,000. We have 143,500, and for C, we have 162,500. A total of 435,000. Then for journal entry purposes, to this uh, close the income and expense summary account to the capital accounts, we can have it debited to income summary, then credit directly the distribution to the capital accounts, thereby increasing the capital accounts of each partners. However, again, they can choose to have it credited temporarily to the drawing account, then have it closed later on to the capital accounts of the partners. Okay, they have the same effect on the capital accounts. Next, we have a loss. Have it as a loss. So incur the loss on 69,000. They agreed that the profits or losses will be divided in the ratio of 1:6:3. So therefore, both profits and losses will be distributed or divided among themselves, A, B, and C, in accordance with the ratio 1:6:3. So if we're going to interpret 1:6:3, we can have it 1/10 for A, 6/10 for B, and 3/10 for C. Or 10% for A, 60% for B, 30% for C. Okay, so a total of 100%. So to distribute the loss, 69,000 times 10%, 6,900 for A, then 41,400 for B, then 20,700 for C. Then the capital balances, of course, expect to decrease it with the distribution of the loss. So 113,100 for A, then 88,600 for B. Okay, it decreases significantly because B has greater percentage or ratio when it comes to the distribution of the profit or loss. Since they are the same in the ratio, the profit and loss, so that's the result of the distribution. Okay, higher amount of loss absorption for B. Then for C, we have 119,300 for a total of net total of 321,000. So for the journal entry, we can have it debited directly to the capital account, then close the income summary account by crediting it. Okay, or they can have it charge muna dun sa drawings account, then later on close the drawing account to the capital account, since it's a loss, thereby decreasing the capital balances. Okay. Next, using capital balances. So they're basing the distribution on the balances that they have. So using capital balances will depend again on the agreement, because we can assume different capital balances when it comes to accounting for partnership operations. So they can agree on what type of capital balance they're going to use. Is it original capital investment, meaning the original amount that they've contributed in the partnership, Or they can have it, the beginning capital balances. Beginning capital balances is not, does not necessarily mean the same with original capital investment. Okay. How we're going to differentiate original capital investment and beginning capital balances? If it is the first year of operation, okay, you may consider original capital investment and beginning capital balances as equal amounts. However, succeeding periods or subsequent to the first year of operation, okay, or meaning the second year, starting the second year of operation, the original capital investment and the beginning capital balance will no longer be the same because of the transaction that is affecting already the capital balances, crediting the capital balance for the profit or additional investment, debiting the capital balance for the loss or temporary withdrawal or permanent withdrawal. So it will affect the balance of the uh, investment. Okay, so just take note of the difference, okay, on how to differentiate original capital investment to beginning capital balances. They will have equal amounts if it is the first year of operation. Okay, otherwise if it is the succeeding years, expect a different amount of beginning balances from the original capital investment. Next, we can have ending capital balances before profit or loss adjustment, meaning it is the ending balance before considering profit or losses. Of course, we are distributing the profit. How can we distribute profit using capital balances after profit or loss adjustment kung hindi pa na-distribute yung profit? Okay? So, the capital balance, always take note, the capital balance must be before profit or loss adjustment. Okay? Then we can have average capital balance. Average capital balance, later on, we can discuss simple average and weighted average. There's no so much explanation with simple average because it is only like 1 plus 1 over 2. Parang ganun lang. Or beginning balance plus ending balance over 2, you can arrive the simple average. But for the weighted average, we use a different method. Okay? So later, we're going to apply it with problem solving. So let's start first with this problem. A, B, and C form a partnership. After the first year of operation, the partnership earned net profit, still 45,000. They agreed, this is the important statement, they agreed to divide the profits or losses using their capital balances. So they agreed to have it for capital balances, but they did not specify on what capital balance. So we're later on expect to have different assumptions. But for specific problem solving in the book, okay, if you encounter problems, it will specifically state what type of capital balance going to use for profit or loss distribution. Okay, for this illustration, for this example, wala munang statement. We're going to have it later, different assumptions. Okay, so you're given there the capital balances, original capital balances, meaning the original investment, are 120,000, 130,000, and 150,000 respectively. Then to continue, the movement in the capital balances of the partners during the first year before considering profits or losses were as follows. So yung original investment or yung original capital balances, 120,000, 130, and 150,000 respectively sa partners, nagkaroon daw ng movement. So there are investment, there are withdrawal, and investment and withdrawal within the year. Then considering those movements, we can already have the ending or final balances before considering the profits or losses. So for A, 120,000 original, or we can assume it is the beginning balance for since it is the first year of operation. Then ending balance is 170,000. For B, 130, and ending balance 145. Then for C, we have it 150 original and 185 for ending. So let's start with first assumption, original capital investment, meaning we're going to assume the original capital investment, 120,000, 130,000, and 150,000. My way of interpreting the proportions for this one is to make fractions out of the initials of the amount. So 120 total first, the original capital investment, we can have 400,000 in total. Okay? Then have it as 120, the first initials of the amounts, 120 over 400, 130 over 400, or 150 over 400 respectively, fractions respectively for A, B, and C. Or we can interpret it for A, 30%, for B, 32.5%, and for C, 37.5%, for a total of 100%. Okay, it should always be 100 based. So for the distribution based on the ratio or the percentages that we have, so the distribution of 45,000 net income, so for A, we have 13,500. For B, we have it 14,625. And for C, we have it 16,875. Then the capital balances after the distribution, we have it there. For A, 183,500. Then for B, we have it 145,000 plus 14,625. We have 159,625. And for C, we have it 201,875 for a total of, in all, 545,000. Okay, we're going to add the profit on their ending capital balance before considering the profit. Okay, the ending capital balances that we have earlier, we have 170,000, 145,000, and 185,000 respectively to A, B, and C. Okay? So, yan ang ating journal entry. Okay, to close the profit or to journalize the distribution of the profit of 45,000. Okay? So, income summary, debit 45,000 at saka credit tayo ng A, B, and C capital for 13,500, 14,625, and 16,875 respectively. Okay? Or we can have it credited muna sa drawings account. Then later on, after the accounting period, we have it closed, the balance of the drawing account, close it to the capital account. Okay? So zeroing out the balance of the drawings account, then increasing the capital account through a credit. So the same effect. Okay? Next, assumption 2, using the ending capital balances. So yung ending capital balances natin, if you're going to notice dito sa table that we have for the problem, we have 170,000, 145,000, and 185,000 respectively to A, B, and C. So using that, the same that we have in original capital balances, make ratio or make percentages. Okay? So 170,000 plus 145,000 plus 185,000, that is a total of 500,000. Okay, let us check. So 170 plus 145 plus 185. Yeah, that is 500,000. So make a fraction out of those initials. So 170 over 500, 145 over 500, and 185 over 500. Okay? Or we can interpret it, you can have it round it off to the nearest percentage, whole percentage. So have it 34% for A, 29% for B, and 37% for C. Okay? So to apply the distribution, 145,000 times 34%, we have 15,300 for A. Then times 29%, we have 13,050 for B. Then times 37,000, we have 16,650 for C. Okay. Then after the capital balances, after the division of the profit, we have 185,300 for A, 158,050 for B, and 201,650 for C. Okay. Then next, the journal entry. Okay, you can close it directly to the capital account. Okay, the distribution can be closed directly to the capital account, or You can have it credited muna sa drawings account. Then later on, after the accounting period, you can debit it to, you can debit the drawings account, then close it, credit to capital account. The same scenario. Same scenario lang yan. Um, ma-zero out yung uh, drawings account at saka mag-i-increase yung capital account. Okay, mag-increase yung capital account. In assumption 3, we have average capital balance. We'll make use of the simple average. Using the information that we have, this table, what we're going to use for the average capital balance, simple average, the original or the beginning capital balance for the first year of operation, and the ending or final balance. So to do that, okay, so 120,000 plus 170,000 divided by 2, we have 145 simple average for A. Then do the same thing for B and C. So 137,500 simple average kay B and 167,500 simple average kay C. Then make use of the initials. Okay, we can extend with the next amount or figure or number for the fractions that we're going to use. So 145.0 over 450.0 for A or 32.22%. Then 137.5 over 450.5 or 30.56 for B. Then 167.5 over 450, okay, or 37.22 for C. Okay, a total of 100% base. Okay, then apply it on the distribution of the profit. So 45,000 times 32.22%, we have 14,500 kay A. Then times 30.56%, we have 13,754 B. Then times 37.22, we have 16,754 C. Then after the distribution of the profit, the capital balances of A, B, and C, we have 184,500 kay A, 158,750 kay B, and 201,750 kay C. Okay? Then again, the journal entry, we can credit it directly to the capital account sa distribution, or you can have it credited muna sa drawings account, then later on have it close to the capital account. The same pa rin yung effect. Then assumption 4, ito na yung most common na ginagamit. Yung most common na ginagamit at lumalabas for problem solving purposes, which is the average capital balances na yung assumption weighted average. When we say weighted average, it does not mean the same with the simple average. For accounting for partnership, weighted average is done through this one. Let's assume that movement, okay? For weighted average, we're going to consider this movement already. Okay? So just follow me. Okay, just follow. The weighted average capital balance for A, follow this one. For January 1 na original capital investment, okay, the assumption is the same 100% capital balance of 120,000. So to have it as average, naging outstanding yung 120,000 na yan before nagkaroon ng investment ng 40 sa March 1. Okay? So from January 1 to March 1, it is good for 2 months. Naging outstanding ang 120,000 na capital balance for 2 months. So times 2 over 12, we have average of 20,000. Then afterwards, considering the investment, okay? Guys, yung may parenthesis, we mean as withdrawals. Kapag walang parenthesis, we mean investment. So, March 1, there is an investment of 40,000. Then after the investment of 140,000, the capital balance will be 160,000. Then before the May 1 withdrawal, the 160,000 capital balance became outstanding for 2 months. Okay? Why 2 months? Whole March and whole April. Okay? Then multiply it by 2 over 2 over 12, we can have 26,667 rounded off, okay, as average balance for that. Then after considering uh, the investment that we have, the additional investment in March 1, nagkaroon daw ng withdrawal ng 10,000 sa May 1. Okay? Then, yung naging capital balance after that is 150,000. Before naman considering the July 1 na additional investment na 20,000, yung capital balance na 150,000 naging outstanding muna for another 2 months. So whole May and whole June. Okay? Then times 2 over 12, yung 150,000, the average capital, average balance for that is 25,000. Then consider after 150, considering capital balance of 150 kasi 150 na, and after considering 140 and after considering the 40,000 and 10,000, 40,000 investment and 10,000 na withdrawal, nagkaroon ulit ng another additional investment. And afterwards, 150,000 nadagdagan daw ng 20,000, nagiging 170,000 na siya. Then at the end of the year, naging outstanding daw yung 170,000 na yan by 6 months. By 6 months, whole June, whole July, whole August, September, October, November, and December. Okay? So times 6 over 12. So the average balance for that is 28,333 rounded off. So we can total this all to 100,000. So the average capital balance for A is 100,000. Do the same analysis for B. So for B, yung magiging average capital balance niya in total is 156,250. Okay? Then for C naman, yung magiging total average, weighted average capital balance niya is 165,833. And through those amounts, okay, we're going to make fractions. Okay, the same goes what we have done in the previous assumptions. So 100,000, 156,250, and 165,833. We cannot make use of initials because of whole figures that we have for B and C. So make fractions. 100,000 over the total is 422,083, or we can make percentage. For A we have 23.69, for B 156,250 over the total we have 37.02%, and for C we have 165,833 over the total we have 39.29%, a total of 100 base. So make use of these percentages. You can have it rounded off to 2 decimal. Okay, I advise round it off to 2 decimal. Okay. Then for the distribution of the profit, for A we have 10,661. Then for B we have 16,659, and for C we have 17,680 for a total of 145. Then after the capital the capital balances after the profit distribution, we have 180,661 for A, 161,659 for B, and 202,680 for C, for a total of 545,000. So I hope you were able to catch up the different assumptions, the different how you're going to differentiate the different assumptions that we have using the original capital balance or ending balance. Okay, then the average balances, either simple average or weighted average. Guys, between weighted average and simple average, mostly common yung weighted average. So be careful. Then the journal entry for the the profit distribution, you can credit it directly to the capital account, or you can have it credited muna sa drawings, then i-close naman yung drawings doon sa capital account. The same scenario pa rin yan. The same effect dun sa um, capital balances. Okay, the next we have distribution na with salaries. May distribution na ng salaries and the excess based on the agreement. So how we can have it? So let's have it this one. So profit of 45,000, then profit or loss ratio 2 is to 3 is to 5. Then they have agreed the following: salary of 2,000 for uh, each partners. Okay, so 2,000 respectively for A, B, and C. Then excess of the profit according to the profit or loss ratio. So according to 2 is to 3 is to 5. So this distribution that we can have that in a table form. So salaries 2,000 each for A, B, and C. Then the excess, how we're going to determine the excess? Out of 45,000, 6,000 had been distributed already. So the difference is 39,000 positive amount. Then make a distribution out of the 39,000. So 20% of that is 7,800 for A, 30% is 11,700 for B, and 19,500 for C. Okay? So for distribution, total distribution, for A we have 9,800, then for B 13,700, and for C 21,500. Okay? So yan yung journal entry, pwedeng credit sa capital account agad or debit muna sa drawings account. Since we have specific distributions ng profit na meron muna sa salaries, then meron sa excess, you can have different journal entries for the distribution. So the first entry is the distribution of salaries, and the second entry is the distribution of the excess. Okay, depending on the agreement. Then later on, you can have it close to the capital account. Yung total na, you can have it yung total. Okay? The next is with interest and excess based on agreement. So aside from salaries, we can have also interest. Then the excess based on the agreement. So the same problem, the same profit, 45,000, the same profit or loss ratio, 2 is to 3 is to 5. Then meron silang agreement, again, 2,000 for each partner. Okay, then meron daw interest based on capital balances. Okay, based on capital balances, 5%. Then the excess daw, excess of the profit in accordance with the profit or loss ratio. Guys, again, be careful with the interest. Be careful with the interest because what is referred here is based on capital balances. The capital balances here may refer to original capital balance or beginning balance or the ending balance before profit or loss distribution, or you can have the average balance, either simple or weighted. Of course, always consider lang the weighted. Okay? So for this one, ayan, yung interest will be based on the original balances. I mean the capital, not the original balances. What is stated here is capital balances before considering. So ending balance. Okay? So the balances before considering profit. So 120, 120, 130, and 150. So for A, we have 6,000. For B, we have 6,500. And for C, we have 7,500. A total of 20,000. Sa salaries naman, the same pa rin. Total of 6,000. Then to have the excess, we have total of 26,000 already na na-distribute. Then ibawas sa 45,000, the difference is 19,000. Then distribute the excess based on the agreement. 2 is to 3 is to 5. Okay? So 3,800 for A, 5,700 kay B, and 9,500 kay C. A total of 11,800 for A, 14,200 kay B, and 19,000 for C. Journal entry, pwedeng i-credit ulit sa capital agad or magkaroon ka ng specific distribution through a credit to drawing account. Okay? So, first entry, uh, distribution ng salaries. Second entry, distribution of the interest. And the last entry, distribution of the excess. Then afterwards, yan, i-close sa capital account. Okay? Then last, we have with bonus. So aside from salaries daw and interest, we can have distribution of the bonus. Then the excess based on the agreement. Okay, the same pa rin, 45,000 net profit, 2 is to 3 is to 5. But this time, aside from salary and interest, may bonus daw to managing partner A and C of 1,000 each. So may bonus daw kay A and C. So meaning yung nagma-manage lang ng partnership is A and C, hindi si B. Okay? Then the excess profit according to profit or loss ratio. Okay. So may distribution ng salaries, good for 6,000 lahat. 2,000 each. Then interest based on capital balances before profit or loss distribution. So 6,000 and 6,500 and 7,500 respectively to A, B, and C. Total 20,000. So a total of 26,000 na. Okay? Then bonus naman, yan, may bonus daw sa hanay ni A at sa hanay ni C. Wala kay B. So total of 2,000. So since a total of 28,000 na lahat na distribute, versus the 45,000, yung excess is 17,000. Still a positive amount. Okay? Then distribute the 17,000, 3,400 kay A, 5,100 kay B, and 8,500 kay C. So 12,400 kay A, 13,600 kay B, and 19,000 kay C. Okay? So, ayan. Pwedeng credit ulit. Diretso yung distribution sa capital balances or capital account. Or you can have it separate distributions. First entry sa salaries, second entry naman sa interest, then the third entry dun sa bonuses, respectively kay A and C lang. Then yung excess na 17,000 sa lahat. Okay? Then afterwards, you can have it closed dun sa capital account. Okay? And last focus is the bonus computation. Okay. So last na to, bonus computation. So for bonus computation, bonuses, distribution of bonus, depende yan sa problem. Kanina, the bonus that we have given agad yung amount ng bonus. But for, alam nyo naman, para may challenge, bonuses are not directly provided. You're going to compute for bonus. Again, basic concept, bonus in strict sense, okay, available lang pag may profit. Pag loss, wala. So no profit, no bonus. Could be in the form of percentage or profit, and it is computed minsan sa problem solving in effect of income taxes. So meron tayong mga tinatawag na after tax. Okay? So to do that, computation is depending on the agreement. Okay, merong mga agreement yan. Pwede daw yung bonus i-base sa profit before salaries, interest, and bonuses. Pwede naman net profit before salaries and interest only but after deducting bonus. Later, i-illustrate natin yan. Pwede namang net profit after salaries and interest but before bonus, or pwedeng net profit after salaries, interest, and bonuses. How are we going to do that? Problem solving. Okay. So ito. The same problem solving kanina, yung nagkaiba lang is meron daw 10% bonus to managing partner A. Okay? So, 10% bonus to managing partner A, excess daw is according to profit or loss. Hindi sinabi kung anong computation ng bonus. Okay? Basta 10% bonus to managing partner A. So, it could either be among these four. So, we can have assumptions. Okay? So, assumption 1, net profit before salaries, interest, and bonuses. Pag ganito yung assumption before salaries, interest, and bonuses, simple lang po yung distribution yan ng bonus. So, computation of the bonus, ito yung magiging analysis natin. Meron siyang bonus, naka-question mark kay A. So, computation of the bonus, yung net profit natin na before salaries, interest, and bonuses, after deducting them, is 10% of 45,000. So, bonus 4,500. So, 4,500 kay A, wala kay B and C. So, total niyan, ayan. Then, the excess daw, positive amount pa na 14,500. Then, i-distribute. Kay A, we have 15,400. Then, kay B, 12,850. At saka kay C, 16,750. Okay? For assumption 2, we have net profit before salaries and interest only, but after bonus. Kanina, before ng lahat. So, minultiply agad natin sa 45,000 yung 10%. Dito, hindi natin i-multiply by 45 sa 45,000 agad. Ano yung gagawin? Okay? Ito ulit yung ating analysis. Computation natin ng bonus is 10% profit. Yung net profit na to is before salaries and interest, but after bonus. So, ima-minus daw si bonus. Ganito, yung magiging analysis, parang gagawa tayo ng algebra. Okay? Mag-algebra tayo. Gagawa tayo ng mathematical expression, magsisimple algebra tayo dito. Since bonus is computed as net profit, 10% of net profit minus bonus, so yung maging distribution nito, 10% net profit minus bonus will be expressed as 10% net profit minus bonus. Then 10% i-distribute, i-expand natin, magkaroon na tayo ng assumptions ng amount, i-post yung amounts, 45 net profit minus 10% ng 45 minus bonus. Okay? Then, i-distribute sa 10%, magiging expression na, So, magiging negative 4,500, then negative, magiging positive 10% bonus. Then, i-distribute ulit si 10%, so magiging positive 4,500. Then, ito 10% ito is minus 450 because positive times negative is negative. Then positive times positive is 1% bonus. Then to do that, like terms. So bonus minus, this bonus here will be considered as 100% bonus. So minus 1% bonus will become 99% bonus. So equal to 4,050. Then eliminate 99%. So for 4,050 over 99%, yung magiging bonus is 4,091 kay A. So distribution yan, ganyan. Positive excess pa rin na 14,909. So distribute yan, 15,073 kay A, 12,973 kay B, and 16,954 kay C. Yan. Then assumption 3 naman, after ng salaries but before bonuses. After salaries and interest but before bonuses. So, yung magiging natin, computation ng bonus, i-minus daw si salary at i-minus daw si interest. Since provided naman si salaries and interest, i-minus na lang agad. So, 45,000 minus 6,000 salaries minus 20,000 interests. So, excess is 19,000, i-multiply si 10%, yung magiging bonus is 1,900. So, yan yung ating analysis. Positive excess pa rin, 13,320 kay A, 13,630 kay B, and 18,050 kay C. Then last, net profit after salaries, interest, and bonuses, after ng lahat. So, eto na, magkakaroon tayo ng confusions dito. So, sundan lang ako. NP is net profit, SA for salaries, IN for interest, BN for bonuses. So, we're going to use this acronym. Magiging acronym yung mga terms na to. So, yan. Mas magulo na. So, yung si bonus, i-express natin as 10% of net profit of 45,000 before or after salaries, interest, and bonus, BN. Yan. Ito yan siya. So, ito net profit 45, salary 6,000, interest 20,000. Si bonus, ito si bonus, yung kabuuang ito from 10% down to BN. Okay? Then simplify everything. So ito magiging 19,000, then i-express ito magiging 19,000 din to minus BN. Then distribute sa 10%, ito magiging 19,000 magiging 1,900 negative, negative minus times positive is negative. The negative times negative is 10% bonus positive. Then magiging 19,000 to. Then simplify ulit, distribute sa 10%. Ito magiging 1,900. Ito naman magiging negative 190. Then ito naman magiging positive 1% bonus. Then like terms, okay, simplify ito magiging 1,710. Like terms, ilipat si 1% bonus, magiging 99% bonus o equals to 1,710. Then eliminate the 99%. So bonus is equal to i-gross up si 1,710, so maging 1,727. So yan yung maging bonus niya. Then excess is 17,273, positive balance pa rin yung bonus, yung excess pala. So 13,182 for A, 13,682 for B, and 18,136 for C. Okay? Last, okay, distribution is greater than net profit. Kung mapapansin nyo earlier, yan, yung mga naging distribution natin is always positive balance yung excess, positive balances yung naging total. Dito naman, magkakaroon tayo ng expect a negative. Why? Because distribution is greater than the net profit. Kung mapapansin nyo kanina, yung distribution is nagiging equal lang sa profit. So walang negative balance o walang negative amount na naging result. Dito naman magkakaroon tayo ng negative balance. Okay? Let's talk effect the problem. Earn the profit of 50,000, profit or loss ratio 2:3:5. Then may capital balance sila 120, 130, and 150. Then distribution ng salary na 5,000, kanina 2,000, ngayon 5,000 for each partner. Then 10% based on the capital balance. Then 12% down na bonus to managing partner A based on net profit before salaries and interest and bonuses. So yung assumption before. So walang problema. So excess of profit according to profit or loss ratio if there is an excess. Now, ito yung magiging analysis natin. Question mark muna. Bakit dito yung excess? Kanina excess lang, linagyan ko na ng deduction. Kasi we do not know kung yung magiging excess is really a positive amount or a negative amount. So to do that, may distribution na tayo dito ng salaries. 15,000 na yan. Kanina 6,000 lang dito kasi 2,000. Ngayon 15,000 na. Okay? So malaki-laking amount na yung na-deduct. Then yung computation naman ng interest, okay? So each partner, 10% na daw ng kanilang capital balance before profit or loss. So 12,000 kay A, 30,000 kay B, at saka 15,000 kay C. So computation naman ng bonus is only before everything else. So 12% ng net profit na 50,000 is 6,000 for managing partner A. So kung ilalagay natin yan sa ating analysis, take note, malaking amounts na yung nababawas. Yung interest pa lang is a total of 40,000 na. Plus 15,000 sa salaries, 6,000 naman sa interest. So malaki-laking amount na yan. Okay? So this will be a total of, magkano to lahat? 40 plus 15 is already 55,000 plus 6 is 61. Mas malaki na yung na-distribute natin is a total of 61,000 na compare sa profit na 50. Kaya na naging negative yung excess dito. So instead of excess positive addition, magiging excess negative or deduction siya. Okay? So magiging deduction siya dito. Okay? So since naging deduction siya, magiging bawas siya sa magiging net ng kanilang distribution. Okay? So for A, 20,800 lang. Then for B, 14,700. Then kay C, 14,500. Instead na naging positive balances dito, naging negative balance. Okay? Or naging negative amount because of a negative excess or a deduction. Okay? Sir, ano po ba yan? Parang normal lang po ba yan sa competitions? Yes. Maging normal yan sa competition. Okay? So, pag nagkaroon ng journal entry, okay, kung i-charge agad sa capital account, yung net distribution na lang. Pero if you're going to have it in charge to drawing account, yung mangyayari, ayan, makikita nyo dito sa last entry, naka-debit yung drawings because yung excess is a negative amount. Okay? Then afterwards, i-close na lang yung net doon sa capital balances. The same pa rin yung magiging effect. Okay? That's it. So, tapos na tayo sa ating partnership operations. So, I hope nakahabol kayo. If not, kindly, replay and replay the video. So, tapos na tayo sa partnership formation. Then, tapos na tayo dito sa partnership operation. Stay tuned naman sa partnership dissolution and liquidation. Okay?